All right, welcome to the weekly meeting, April 8th. Kicking it live and in color with the Pip Collector. How y'all doing?
In
Great.
living color.
Righty then. All right, what we're gonna do today? What we will do today is I'm gonna take you to the charts. I don't know. One night earlier this week, I was on Zoom with Kenya in the wee hours of the morning. Walking her through what a brother like me looks for in these here streets. So what I want to do is kind of see if we can just find it here on these charts. I hate when this damn thing does this. All right, can y'all see my screen?
Yep.
Okay, what I'm trying to do here, I got to play this because I didn't check this before, but this is the end of a week, right? If I go back to this weekly candle on this US 30, this is what the end of the week looks like. We're expecting a pullback. I just kind of want to see if I can catch this on this 4-hour candle, the first few candles. Okay, it did it on this 4-hour. So I'm going to explain what I kind of look for and what I think that would benefit you as an individual when you're looking for the move in the opposite direction, or if you're in a God's plan situation and you're waiting on a move, this is exactly the sort of thing that I look for whenever I am I'm trading. So the first thing I want to see is the order block in the opposite direction. Most of the time you're going to get it. Sometimes you're not, but most of the time you will get the order block in the opposite direction. Once I see the order block in the opposite direction, I want the move in that direction. Then I want a pullback, right? It's represented in this wick right here. You get the move, you get a pullback, it pulls all the way back to where I have this entry, and then price takes off. If you go back and you study, if you do a little back testing, whenever you have these moves, that's what you're going to see, right? You're going to see where the candle rounds off, right? You'll have a move that breaks structure going back the other direction, and of course it'll break structure on the lower time frame. Like if you drop to the 15-minute, you're going to see a break of structure. Then you're going to see it pull back. The pullback is where you want to get in, and just to kind of bring this home, it was a couple of examples of this last week, and I think we caught this on the daily because the concept is the same. It doesn't matter what time frame you trade this on. But here this past week, was that GA, Sean?
It was EA, and I think it happened on Wednesday. I bucked off the rock, I think Thursday night. We saw I think it was, we looked at the daily and the 12-hour.
Here's Tuesday.
So on the 12-hour on Tuesday, I think you had the,
Oh, this pullback right here.
yeah. So we knew it was going to go up, like
Right.
either Asian or London. And we got the move, but I fucked the rock off. So
It's no different than what happens to folks during the week. So if we look at this on the daily, right? So on Tuesday, we had the order block. Wednesday, it went up and came down. I was looking for this to continue up, right? When I dropped down to the 12-hour, I see price went up, it came all the way back down. So now I'm looking for price to reverse, right? I don't know that this is actually 5 a.m. It wasn't this, Sean. It had to be
it wasn't 5 a.m. We looked at it at the end of the day.
the end of the day. That's why I'm trying to, it wasn't this particular move. It had to be the pullback.
It was a pullback. I want to say it happened on Wednesday. Because I think I stayed up Wednesday night into Thursday.
It was definitely an up move. So price was here. This is the Thursday candle is the one we got.
Yeah. So it was Wednesday after 5, which is Thursday on the charts.
I agree. So price had pulled back here. This is a 12-hour candle. So price had pulled back. We were waiting for price to turn and push up. So let me erase these candles and go back to the 4-hour. So this is what it looked like at the end of the day. And on the 15-minute chart, I was telling Sean, I said, hey, this price is starting to flatten out and you're getting your move back to the upside. So it's going to go up, it's going to pull back and let you in and push further up. GA was a, in my opinion, a more pretty example of the same move. So this is the end of the day, right? This is the bottom of this candle. Do y'all see the thing? You get this wick down here. Now at the end of the day, price is flat across here. You're expecting a retracement to the upside. All you're waiting for is price to push up, pull back, and go to where you're going. Everything on this chart is, is kind of pointing in your direction. You don't have the higher high yet, but you have the bullish order block. You want price to break your moving averages or break your high. You want it to pull back and let you in the trade, and you want to take the trade to the top side. I want you to keep this in mind. This is a daily candle that I'm catching this move in. So I can drop down and I can see this action on the 15-minute. If you're trading this, this is all we do with God's plan. If you're trading it off the weekly, you should be able to drop down to the 4-hour and see the same sort of business, right? You can see that here's your low, you know, as long as price stays high, you're good. You want to see price start to break and go to the top side. So you want to see a break, you want to see a pullback. There's your entrance. As long as your pullback is not lower than these lows, than this low over here, I'm good to go. And once price breaks through my moving averages, I'm, you know, for me, I already know what time it is. You know, this is what I've done. This is how I trade. So when you ask me, hey, you know, Todd, how do we know? And I'm showing you, this is exactly what it looks like. So I'm going to hit play and you'll just watch, see how it went up and came down. You could get in this trade anywhere along here, anywhere along these lines, right? Oh, the tide that broke this low, it wicked down, but you know that price is going up. It broke these highs, it pulled back. Anywhere in this trade would have been perfect. Anywhere you entered this trade would have been perfect. And you would have been collecting all those pips. Now, at some point during the night, you're going to get a hard retrace, right? And you can set your clock to the retrace, right? This hard A retrace, you can set your clock to it. That's the London pullback. So if you're adding positions somewhere along here, you know, and it's like 8 o'clock at night, just understand that position is going to get liquidated during that London retrace. But you can go back and you can look. If you enter here and enter here and enter here, you get 3 or 4 positions, 2 positions, you know, it doesn't matter. If you get multiple positions, when you're supposed to get them, when price is down here, you can sleep like a baby through all of this action, right? Because this is definitely going to happen. We knew it was going to happen. This is the same action that we see when we trade the pullback on that weekly candle. If you understand what's supposed to happen, if you can visualize in your mind what's supposed to happen, you can take advantage of this. And you don't have to be on eggshells or on pins and needles when you put your positions in when you're supposed to, because here's your low. Price flattens out. It pushes up. It pulls back. Anywhere in here, after it pushed up and pulled back, anywhere in here is a good entry. Now, once price goes back and breaks as high, I don't recommend you enter anymore, because you never know when this hard retracement or this hard retracement is going to happen. There's 2 times that this can happen, and you can go to your 4-hour candles, right? When your 4-hour candle closes, you're going to get a pullback, right? So if you look at this based on your 4-hour candles, okay, this was 913. This is your 1700. So price pushed up. Well, I would have to go back and replay this. I think we're right here, Wednesday at 1700. Yeah. So if you can see you get 2 candles, you get 2 good green candles, right? Y'all see that with relatively no retracement. So this is your end of day candle. For me, this 1700 candle is 3 o'clock here. So from 3 o'clock to 7 o'clock, this is the first candle. From 7 to 11 my time, 11 local time, I can get up and check. There's a hard retracement, right? So as long as I didn't enter in here, I'm not in any drawdown. If I entered my positions down here where we talked about in that 15-minute, I'm good to go. No drawdown affected me. But once you start entering positions after 11, there's a hard retracement there. And then at 3 in the morning, or, you know, at 3 in the morning, there's another hard retracement and price pushes up. Now, these times are going to be different according to where you are. But if you can look at the candle time, this is all my candle times are New York time. So this is the 1700 East Coast time candle. So this is a 4-hour candle. So at 9 o'clock East Coast, 9 o'clock at night, this closes and another one opens. So 10, 11, 12, 1 in the morning East Coast time, this one closes, and that's when the London session is open. You get that hard retracement. Halfway through London session, you get a second hard retracement. For me, I'm already in from down here, so I'm not worried about these hard retracements. But if you jack your entry up, or if you're adding positions way in here, and they're too big, and that hard retracement hits, you're going to get cooked out of your trade, even though price pushes on up. So if you understand the concept that we're trading, right? And I keep saying that, right? If you understand the concept of God's plan or this pullback strategy, right? Then you understand your entries need to be early. You need to catch the move, right? And if you can't catch the move if you're not here when this candle opens up at 1800, right? At 1800, because you can't put in trades for that first hour. I guess you can, but you're gonna pay dearly for it. But if you're there at 1800 and you can enter your positions, it's gonna pay you. This is on the daily, guys. This is on the daily. I think we caught like 158 pips off this move. This is a daily. Just because we understood the direction that the market was pushing, right? Here's a daily order block. You had this kind of wick candle. You know, basically it's a rally, base, rally, base, rally. All we did was we waited for this base and we caught the second rally, right? So we actually traded, I traded both EA and GA, but Sean got in the EA trade exclusively. On this same day, I looked at EuroCAD, I looked at GCAD, EA, and GA. And the best ones were EA and GA. So if you're a person that trades multiple and you have like multiple small positions and then you see which one is moving, you just concentrate your action in that in the ones that are moving. I understand that too. But what I'm trying to tell you is if you focus in on what you see, you know, on these daily candles, like if you get this daily order block and you're expecting this pullback, well, when you drop down to that 15-minute, you can see what you need to see. First, this went up, but you would have saw price flatten out. Then you would have saw price start selling. It would have crossed over your moving average on the 15 to pull back, let you in the trade, and you would have got this wholesale, right? Now, at the end of this day, you would have known that that was just price tapping into the order block. So the next day, you could have did the same thing for the buy. You can play this game every day of the week that you have daily order blocks. Every day, you can play the same game, right? Now, you're not guaranteed to just get a move in one direction. Like what could very well happen is it could tap in that same night and then start buying. So you want to have a plan to where you're checking or you're taking your profits when you're supposed to take your profits. And you should take your profit when it retraces 50% of that candle. Don't be greedy, guys. You don't have to be greedy because there's a unlimited amount of pips that are being given out every day. Every day these happen. You know, I mean, if you're a person that trades anything like I do, you know, I mean, if you're a person like Kim that trades certain things, maybe it doesn't happen every day, but it happens enough that you can collect your pips for that week, right? I'm not telling you have to collect 100 pips a day, 50 pips a day, but what I'm telling y'all is we're giving you 100 pips every week. Every week, we call out trades that go 100 pips, right? On the pullback, I'm talking about on the first of the week pullback. Most of the time, we're paid out by Wednesday. Now, these trades that happen, like we caught that trade on a Thursday, 158 pips. So you could have collected 200 pips. Any week, any week you can collect 200 pips. So all I'm trying to tell y'all is if you know what you're looking for, all you have to do is be patient enough to wait for it to give it to you. And all I do is sit on it. Man, I know I'm looking for this pullback right here. So guess what? This week, it didn't give it to me. It went down. I mean, this day, you didn't get it. But this next day, you got it. Here's a bearish order block. You waiting on a pullback. This thing kept going. It don't mean you jump in for the sell because it kept going. You got to wait. Now it pulled back. It just kept going. There's your pullback the second day. That's what you were waiting on, this retracement to the order block the whole time. You didn't get it to the second day. You have to be in charge. You have to be the person who understands what they're looking for on the chart. And if it never shows up on the chart, then you don't ever have to take the trade. You shouldn't take the trade. And that's what I mean by when I tell you guys, hey, this is what I think is going to happen, but you can't place the trade until it actually happens, right? So if I'm expecting that pullback on EuroCAD, if I was, on EA, if I was expecting that pullback, this buy up that day, and it never, price never flattened out and never gave me that sign, I would have never entered that trade. But to me, all I was trying to do with Sean is say, man, look, this is a layup that the market has given us, right? Like we saw it before. And I personally, I like the GA chart better because the GA chart was more of a flat, like this one rounded, and this low was lower than these lows, right? Now I still had confidence that it was going up. And if you throw the fib on this move from here to here, the pullback, you'll know that this is a 78. So it's not a big deal. But just if I was just looking at this section, because some of y'all do this to me, some of y'all be like, well, Todd, you said right here, if it wasn't flat, then don't take the trade. That's cool. In a vacuum, you're right. But you have to take everything into consideration when you trade, which means you're going to fib this move and this pullback. It all lines up, guys. Like whenever we talk about things, they all matter, right? I'm just showing you what I'm looking for, at that time. Now, all the rest of this stuff, like this impulse move, this pullback to your 78 is the optimal trading entry. This would have got you a great trade, and you could have traded it to this negative 27. You see, you'd have made that, no problem. This thing went way up here. So you could have just traded the Fed pullback. That's valid. This 78 pullback is valid, right? There are 1,000 different ways that you can see the market. And I'm not saying that any of them are wrong, but what I'm trying to explain to you as a trader is your edge is going to be catching the market at a spot that you have the advantage. When the market stops, we have the advantage because we can see every freaking thing. And every day the market stops. It stops at 5 o'clock p.m. On New York time. So if you can recognize what has to happen after that, like that day we knew, hey man, this thing is going up. So all I did was just drop down to that 15-minute chart. Now I got you. All I'm waiting on, pullback, the push up. Let me make it bigger. All I was waiting on was the push up, the pull back to let me in the trade, and I'm off to the races. That's all I needed. This is all that I look for, the same way on the 4-hour chart for the weekly, right? Same principle. Everything is the same. So you don't ever have to ask, What's up, Chanel? Hello? You don't ever have to ask what I'm looking for, right? Like, I mean, I don't mind if you ask, but I'm showing you. I'm showing you what it looks like on the chart. You can see it. Price comes down, it flattens. Now it pushes back up. Even if you're a late bloomer and you say, okay, well, it didn't break this high. I waited till it broke this high and it pulled back. You can still get in right here, right? That's cool. But I'm just showing you what it looks like whenever what I'm looking for when I'm getting in these trades. So everybody will have this on video, right? That's exactly what it looks like. It's not a gimmick. It's nothing extra. It's nothing special. That's it. That's how it looks. That's where you can pinpoint. I mean, there's 1,000 different ways to get a entry right here. Your stop loss, you could have had your stop loss way down here if you wanted to. You know, however you want to do it, right? Like, however you see it, maybe you wanted to use this imbalance as your stop loss. I don't care. All I'm telling you is this is what the move looks like, and this is what I knew was going to happen. It's just a matter of when, you know. And when these pullbacks happen, they are always going to happen at your 4-hour candle closes, right? You're not going to have the major pullbacks, you know, generally speaking, until your 4-hour candle closes. So if you can get in this trade at that 1800 hour, you already know those first 3 hours are going to be good. It's going to be a good move, right? Now, you might get a hard pullback in the middle of Asian session. Every now and then that happens. But if you don't, if that second candle pulls off again, you already know you're going to get that pullback at the start of London. And sometimes, you know, you'll get a pullback at that in the middle of London session. And I think that night it was a pullback in both the start of London and the middle of London. But if you understand that, you know, you can always set yourself up pretty decently during the Asian session. I know most of us never trade on Asian session. I told a few of you guys that if I don't get my position early in Asian session, I ain't messing with it. And that's why, because that hard pullback will it'll clean your clock. You guys have any questions? It's always quiet, man. It's always quiet, and then nobody understands.
They all understand, man. So we're good. And quite frankly, you know, to be honest, you know, I think people are just gonna have to trade it, you know, once or twice to really get it anyway. You know what I mean?
Well, I do. I know, but that is what's going to happen. But so this brings me to my next point here, hedging, because I always get this thing about hedging. Hey, you know, I need to see you navigate the hedge. Let me explain something to y'all. Maybe this will help you when it comes to hedging. I'm expecting price to push to the top side. Maybe I get cute. Maybe I say, hey, man, I want the smallest stop loss because I want the biggest. I want to get a 40 RR on my trade. So maybe I do it like this. And because in my cuteness, I put my stop loss here because, you know, I don't think price is going lower than this order block. And then the market maker gets cute and sweeps me. And then I'm put into a hedge. This is exactly how it happens, guys. Now I'm in the hedge. So here's what I mean by you can cut your hedge or you can start cutting your hedge. Just because my hedge position got picked up doesn't change the fact that I believe price is going up. The only thing that I messed up on was I underestimated how far price was going to push down before it started going up. Okay. So a lot of you guys have asked me, well, I can get into a hedge, but I don't know how to get out of the hedge. And then I look at you or I think about you. And I think about how to answer this question, like, because it doesn't make much sense to me. Because in my opinion, you have the market pegged to go up. So the only question, in my opinion, should be, when do you start cutting off the hedge that got picked up? And the logical answer is once price starts pushing the direction that you thought it was going to push, right? So that's it. I think that's the best answer I can give you. Now, some of you will probably say, well, sometimes I cut my hedge off and then price goes lower. And I would say, yeah, I've experienced that when I first started hedging. And I think the easiest way for me to answer this for you is this. If my hedge got picked up here, I'm probably not going to cut the hedge until I get this low here. Let me move this down so it won't light up. So I'm probably not going to cut the hedge until I get this second low. This low is higher than this low, right? So now I'm confident that my lows have been put in, and I can look and say, okay, well, they just sweep this low. I mean, if I'm being perfectly honest, this is just Wyckoff, right? And I don't want to get into Wyckoff. I mean, those of you who have been trading with me long enough, you could, hopefully, y'all know you can print off your little Wyckoff diagram and it has it all labeled. You got the spring and all the other stuff. But that's all this is Wyckoff, right? And once this higher low, I'm cutting. But let's just say you're still not a believer and you're still in your hedge. Once you break this high and pull back, you can definitely cut. You can cut a lump sum right now. Because now you have 1, 2, 3 highs that are higher than your lows, right? And if you had cut here, you'd have cost yourself 9 pips of 158 pip move. Okay, so hopefully that explains to you how hedging works, right? Your original direction is still your bias. Maybe you underestimated, the low or whatever. And the same can be said for God's plan. Sometimes price goes up higher than you expect, but once it turns on that 4-hour chart and starts going your direction, the same concept. Hey, it's probably going to be more than 9 pips, right? On the 4-hour chart. It might be 19 pips, or it might be 20 pips difference. But hey, it's all good. You're still going to get your 100 pips out of it. My point is, the concept is a solid concept. The minutia, the details of the concept change, right? Like the wicks, how low or how high it actually goes, that stuff changes. But the concept of the trade is a solid concept. It doesn't change. So all you're doing is waiting for the chart to print the details. And then you can look at the details and make your decisions on as far as your cuts, as far as how far up you're taking the price. When you look at this at 2 in the morning, you're like, okay, price still needs to go to this imbalance. I'm good on these pullbacks, right? Like we were biased for this to keep buying anyway, if we go back to this daily chart, we were biased for price to keep pushing up. This, if you did the fib from here, this was just a pullback. We were biased for price to keep going higher. Hell, we wish it would have went higher, you know, but all I'm telling you guys is once you have your bias, all you have to do is trade the freaking setup, and the setup is going to pay you accordingly. It's not just going to not pay you because you entered the trade. You got this impulse move, you got a pullback right into your golden zone, price pushed higher, right? Pull back again. Now you're getting in right here for the buyout. And we would have really liked to see it break the highs, but still 158 pips. It's a great trade. It's a great trade. Does anybody have any questions over any of that information? Bruh, we see it every week. You're gonna see this next week. You're gonna see this coming week. It's going to happen. As a matter of fact, rolling. Silver. This is silver, y'all. Y'all see what we're looking at? Weekly order block. If you look at it on the monthly order block. Price is pushed deep into the monthly order block, tapped into this weekly order block. We expect a pullback, but we know that these gold and silver and these other commodities are going to be going higher, right? But we're going to get a pullback. We already see a wick on our candlestick. If I drop down to this 4 hour, oh my God, price is flat. We just talked about it. Now, ideally, once I would have got this price pushed up, came back, I would have been in the trade. But this is giving you a second life. See how you get this wick down? Now price is retesting. This thing is going to start pushing down. Y'all can see it. Y'all see it, right?
Yep. I think you were on the fifth. I can't remember what time frame you were on when you first.
I was on the 15-minute of the.
Yeah, I was gonna say you can even see. So I saw it even clear, of course, on the 15 as well.
Right.
So
Well, but I didn't know. I wasn't on it with silver, but I'm just showing you an example of a weekly candle, right?
Mm-hmm.
Dropping down to the 4 hour. The other one was a daily candle. We dropped down to the 15-minute and saw it flat. Now, if I drop down to the 15-minute, you're going to see more details. But I'm just wanting, like when the people always ask about the week, God's plan or whatever.
Mm-hmm.
This is all that this is what I try to get people to understand, right? Like you can see the prices setting up to go down.
Yeah.
So this is all that I ever look for. This is when I know, hey man, this thing is ripe for the trade, right? Like some of y'all asked, like, well, I just get in the trade and set my stop loss, which is cool. That's why I created it. But that's not where you want to be as a trader, right? You're still trading with blindfolds on. This way, I'm just trying to take the blindfolds off so you can understand. So it starts with you understanding where we are in the market. You're in the monthly order block. Price pushed into the monthly order block, right? It created a huge order block directly below the monthly order block, which tells us that it's probably going to push through this monthly order block. But you're in it, you're going to get some reaction. It's not just going to go blast through here. You're going to get some pullbacks. And we drop down. There's a weekly order block. You get in a wick, it's going to pull back. Drop down to the 4 hour. Oh, it's going to pull back. We haven't even fibbed the candle yet. We know it's going to pull back. You fib the candle, get your pullback, it's probably going to pull back way down here somewhere, right? And touch these moving averages. But you don't have to trade it like that. You don't have to trade it like that. You can just trade it for your 100 pips. Now, if you think about this concept, guys, there's 1,000 different ways that I can come to the conclusion. Impulse move, pull back into my zone. Let me delete this big fib. So this pull right back into my zone, right? Boom, it's going to go to the negative 27, right? But it's not going straight there. We broke this high. We got to get a pullback, right? So I could probably fib here and get my pullback. It'll probably pull back somewhere around here, right? That's why I had this red line, but it's going to pull back somewhere around here and go higher. Now, you don't need to trade it all the way down there. This is a weekly candle. You can throw the God's plan strategy on this. You can feel that's weekly candle. You can just get that pullback. You don't have to be greedy. You can let it come to you. If you trade silver, if you fib this candle, you trade silver there, I guarantee you're going to make a lot of money. Silver pays a lot of money. You can use a 0.01 lot size. You're going to get paid a lot of money. Now, if you don't know how to calculate your pips, always use your 0.01. You don't want to trade it in your real account. Trade it in your demo. It's a great trading opportunity.
Can you go to the 4 hour real quick?
Back to the 4 hour.
Mm-hmm. And how many pips from where
right now
to the retest of move? Like the top of the wicks of, yeah, or the block, one of the two.
The top of the wicks right here, 772. Now, that's probably about 30%.
Exactly.
So it's the trade is there, man. The dollar is going up. This is going to drop. You know, it's going to be there. All you the trade is there for you to screw it up. You know, that's basically what we're saying. It's giving you everything that you need. Huh?
So I as far as like knowing when the trade is ready for the sell or ready in general, like when we do the beginning, still having trouble like understanding when the pullback is done.
What do you mean when it's done?
Like when like from previous price.
Why did you cut off?
Or it sells.
Oh, this internet. You cut off, so I didn't hear what you were saying. You're saying when it pulls back here?
No, like if it starts buying first before it starts to sell, like knowing when it's done.
That's what I was just talking about. So you have to look at what the price is doing. So let's just say this caught out and started buying, right? Where is this going to buy to?
The previous price.
So basically back to this order block. I mean, we're practically here now.
Before that now. Like, I guess because when I was working with my other pairs, it went past that. It went past it.
Wait, I don't think you can say that without some context to it. So here's what I mean by that. Where are we on this chart? We're at the weekly order block, right? We're at a monthly order block, and a weekly order block is inside the monthly order block. So price is at its objective. Now, maybe if you drop down to the 15-minute, and if there was an imbalance that was higher up in the order block, maybe it goes to that imbalance. But that's where you have to do your analysis when you got to mark up your chart when you're analyzing this pair. I can't go to the 15-minute so early. So you see this imbalance on this 4-hour?
Yes.
So maybe you need to mark this up on your chart. So you know that this imbalance is in your order block, and maybe price is going to go up and touch this imbalance before it starts selling. You have to understand where you are on the chart, right? So here's what I mean by that. This is a weekly candle. I just marked up where there was imbalance on the 4-hour. I'm biased for this to pull back first, then go up, touch the imbalance, probably pull back again, then go up. Now, because I'm biased for it doesn't make it so. That's why I have to look at the chart to see what's going on. So when this market opens, right? If this thing buys up, I expect it to buy up a little bit, but I don't think it's going to buy all the way up into the imbalance and sell. But if it does, it's fine because it's marked, right? I marked it. So if we break this high, if price buys up and doesn't respect this high, if it breaks the high, in my mind, I'm like, okay, I can't do anything until it gets to the imbalance, right? I'm waiting for that. This is where you have to be, as the trader, like you have to contemplate
Recording in progress.
these things that are on your chart. You can't go in here with blindfolders on. You have to look and see where your liquidity is on the chart. Does that make sense? Hello?
Yeah, I'm sorry. Yes, it makes sense. But I guess my issue, hold on, I'm hearing myself like this. My issue was when I got to the imbalance, it just continues to go up some more and then take me out of the trade.
Which trade are you talking about?
I think it was GA. So I think it was GA a couple weeks ago, but
So,
yeah.
Look, I need specifics because that's not trades don't just like blow past the areas. There's something specific about the move that makes the trade go to where it goes, right? It's not like, hey, just because you got in the trade, it screwed you. It's not. Something on the chart draws the price. So we have to be able to go to the example to figure it out. As a matter of fact,
It wasn't last week. I think it was the week before last.
okay, that's cool. But how about there's a pair that you can mark up. You want to mark up a pair this week?
Mm-hmm.
Okay, once we get to the second segment, you can mark up NZD CAD. Okay. Have you looked at NZD CAD? Huh?
No, not yet.
Good. You can mark it up. I think that's where we have to be as traders, and that happens a lot. It's not you, TT. It's everybody has the same issue. And hey, man, where is this price going? And I'm glad you brought that up because even it doesn't matter who you are, man. Like ICT says, hey, man, price is going to go here. Then price goes past that. What is your defense against that? Well, your first defense is to not act until price acts, and then you react to that price. Like you're anticipating price to come here and respect these highs. So if price doesn't wick out, you don't have a trade. Once price wicks out and gives you a lower high, then you have a trade. So you have to, in your mind, you have to have these scenarios played out, right? This is where price is going. If price doesn't respect this high, it's going to go to this next high. So you watch price. Once it gets to this high, it's either going to respect by rejecting or it's going to keep on going. Once it respects, now you're saying, okay, now I have to find an entry. But when do I find an entry? Do I wait till it breaks this low and pulls back? Those are the things that you as the trader are in control of. This is a 4-hour chart. So you might not want to break this low. You might want to come pull up and break, pull up and retest this low before you get in. All of these things are correct according to you as the trader. So you're going to have to be adept or akin to dropping down, correlating your time frames, going up to understand what's above here. Like, what is your higher time frames telling you? Once you're comfortable with doing that, you're going to be a lot better as a trader, right? I only do things and recognize trade setups based on the way that I see the market, right? So whenever I look at these trades from a weekly standpoint, I'm telling myself, hey man, this trade ran 400 pips this week to the top side. Probably going to give us a pullback. So I'm dropping down, waiting for signs of the pullback. I have a high, I have a higher high, I have a lower high, which makes this a swing high. It's either going to be respected or it's not, right? So I don't have to take any trades until I'm sure that price is pushing down, whatever that looks like on this 15-minute chart. On this 15-minute chart, I have this huge bearish order block. Maybe I need to wait until it breaks this low. Maybe I need to wait till it breaks this low. I don't know what you need to see as a trader, but there is something, in my opinion, that you should be like, you should have these things marked on your chart, whether they're alerts, what there are notes. You can write all kinds of stuff. You can hit the text, hey man, don't trade this until it breaks this low and pulls back for the retest, and then we'll get in, right? I think a lot of people are so scared they're going to miss the move that they either don't have these rules in place or they just skip them altogether, right? Because the worst thing that can happen to you as a trader is, I tell you I'm in the trade, you just happen to trade because I'm in the trade. And you don't know what the heck my rules are or my entry criteria. You don't know that I hedge, you don't hedge. It's not going to work for you. Your trade is going to be trash. And I'm going to make my trade work because in my mind, I'm like, okay, if my hedge picks up, maybe it'll take me up here. Then I'll just start cutting my hedge. I'll add a second position. And, I might be up 4 or 5% when it hits this original entry. But because you don't have a plan, you don't do any of this thinking prior to entering the trade. You just enter the trade because what Todd said, he was in the trade. So really, we all have to get to a level that we understand market structure and we understand our entry criteria. I entered this trade based on a break of this low and a retest of this low, right? On this 15-minute chart, we got up action going, right? We got this high is higher than these highs. This low is higher than these lows. So on this 15-minute, there's no reason for you to enter this trade unless you're telling me I entered the trade because it pushed down and broke my moving averages. But you better be darn sure that your higher time frames support this going lower. And in this case, it does. But you have to be able to answer those questions, guys. That's my point. Like, you have to be able to answer those questions. And if you can't answer those questions, then you don't have any business entering the trade. It should be more than, hey, I'm trading God's plan. This says this is supposed to sell based on this weekly. It's supposed to sell. I already see a wick. All that is true. But if you don't drop down and understand, in this wick, there's a swing high and it should be respected, then, you're probably not going to do well over the long run, you know, because the algorithm is going to do things that defeat you. Like it could wick past all these highs, take the liquidity, and then keep going down. It doesn't mean that the trade I did was wrong. It just means that it was liquidity sitting here that the algorithm wanted to take and go down. So you could be one with a stop loss, and it hits your stop loss and it pushes straight down, breaks this low, which is the trigger for us to get in the trade anyway. Comes back and retest. Now I'm starting to cut my hedge off, and you're already out of the trade, and I go in to make my money. So just understand that you need to mark your chart off, and you need to understand structure and what you need to see happen with that structure as the trade takes place. Does that make sense?
Mhm.
Woo,
Yeah.
anybody else have any questions?
You always gotta have that price action.
Yeah, price
Price action is always key, man.
everything. Everything.
So when you're looking back at previous price, are you are we looking at the body or the wick for where price? Are we looking at the, like, what if there has a big wick on the order block for previous price?
Well, we know that wicks are kings of imbalance. There's always opportunity in wicks. So what specifically are you talking about?
So if we go back in price to the left,
On the 4 hour?
on any time frame, I guess, to see like where price can
I like
go.
looking at the high. This is how I do it. So I would prefer to look at the higher time frame.
Mm-hmm.
So what do you see in price? What do you see in this price right here?
Okay. So so I see that right here, there's price like came to that wick from previous weeks,
Right here.
and yes, yes.
It actually broke through it. Yep.
Mm-hmm. And there are there's imbalance still above that.
Okay. So let's talk about it.
Mm-hmm.
Prior to this week's candle, price respected the order block, right? You see that? This was the order block. $12-hour order block. See that?
Okay.
Now, price came right to that order block at the end of the week. At the end of one of those weeks, price went right to this order block. Then it sold down. Then it went back up. So if we go back to the weekly, prior to last week, I'm scared to hit this X. So at the end of the week, price hit that 12-hour order block and it stopped, right?
Mm-hmm.
Now, we knew it was going to pull back, but the expectation was always for it to keep going. You notice I have a black line right here at this imbalance.
Yeah.
My chart is marked for for what's going on. This week, price pushed right back up. But it pierced the top of the order block. It's going to pull back. Where is price going to go? We know it's at least going to the imbalance, right? We're going to close this imbalance at this stage.
Mm-hmm.
Maybe even keep on going. So if I throw a fib on the move from way down here, whenever that woman was acting a fool with her Brexit strategy, We didn't even get a pullback to the golden zone. This thing shot way up. So this was the basic, this is the 27, the negative 27, which coincides just above this imbalance, but whatever order block is right here, maybe it's a daily order block, that's a negative 27. Now, once it gets here, it's either gonna break this high or it's gonna respect it. I don't know, but at this rate, we know it's at least coming, right? We know it's at least coming to the negative 27. Wouldn't that be a safe assumption?
Yes.
So I say all that to say this, TT. Once you have a story that this chart is playing out, all we have to do now is go and label the chapters of the story. Here's an order block that was on the 12-hour. Notice I had it marked out. Notice I have the imbalance, marked on my chart. So now all I'm doing is watching price check off all these blocks as it's pulling back, going up. Target. This is the target right here, in my opinion. Right? So it's going to pull back, but this is always going to be where price is going because it has to close out this imbalance. So all I'm doing is trading. I'm trading price according to where my target is. So this is how I do it. I mark my areas over here, and then I see where price can go. Every now and then I'm wrong. A lot of times I'm wrong. But the difference between me and maybe somebody with lesser experience is when I'm wrong, I don't freaking trade it. You understand what I'm saying? So I have an idea in my mind that price is going to pull back. If price just goes straight up, I'm not trading that. I'm not putting in a sell as price just pushes straight up. It didn't make sense to me. It didn't do what I thought it was going to do. So I can't trade that move with any kind of confidence. Now, maybe I can readjust as price goes up and it pulls back and say, okay, well, here's a pullback. I can get in for a buy and I'll just buy it to right here. But I can't trade. I can't just jump in and hit sell and then watch price go up. That's not how it works for me. I wait until something on the chart tells me, hey, it's time to sell this. Does that make sense?
Yeah.
And when I say something on the chart, normally I'm talking about the 15-minute time frame because that's where I normally get my entries, right? So if I was trading this in real time and this pushed down and crossed over my moving averages, and I say, okay, I'm going to enter this based on the 4-hour already told me, right? The 4 hours, this is a lower low. I'm just waiting for price to push down. To me, this is a very aggressive entry, but I would be okay with entering. I would tell you probably don't enter until it breaks this red line. It's a safer entry because this low breaks this low. But if I'm trading this, maybe I'm comfortable taking this entry because in my mind, I've already said, okay, well, if it goes up, I'll kill my buy. I'll kill my sell and go with the buy. I've already contemplated that in my mind, what it's going to look like. And whereas you may be a one-way trader and you're just going to sell it. So I would tell you, don't enter until it breaks this low or maybe this low. I don't, whatever.
Closes below the low, below the red line.
Exactly. The same way that this broke and closed below my moving averages. That's what I would want to see for price on the, as far as breaking structure. Now on the 4-hour, price came and broke this low. It came and broke this low. It is breaking structure. Got the pullback. It pulled way back. It just wicked. It wicked these highs. I'd have felt a lot better if this had been a bearish order block. But you know, it is what it is. So price can buy back up into this wick when the market opens, but it's in my opinion, it's still going to drop.
But I do see a 4-hour order, bearish order block right there in the middle.
Well, you see
That close.
you see a
Mhm.
bullish, this the bearish
No.
order block?
No, the before the bearish order block came, the bullish order block is there. I mean, I'm sorry. Before the bullish order block,
Right, the bear, right,
Yeah.
I agree. But this wick took it out.
yeah, that wick. Mhm.
Now, I'm still biased that price is going to sell, right? But it has to play out, you know, and that's the thing. I have a bunch of biases. And, you know, ICT used to always say, do you want to be right or do you want to get paid? You know, so, you know, I'm a person that just wants to get paid. I don't care about being right or wrong. I'm biased for the sell. Doesn't mean that it's going to sell. It could buy right up. Bullish order block, price is pushing up. It hasn't, you know, you got your moving averages across here. But in my opinion, you know, price is going to pull back. So that's what I'm looking to see. And I'll be looking to see it on those lower time frames.
Thank you for explaining.
But NZD CAD, you know, you can break that down for us in this next segment. That'd be great. What?
Okay, I will.
This for
I
this
will
for the
give you
good
my
of the group.
opinion.
All right. Do I have any questions over anything that we just covered? Brad. Okay. All right. We'll see. We'll see, folks. I guess we'll close out the weekly meeting portion and we'll get into the market analysis that Selena failed us on.